Good afternoon, everyone. Myself, Tejas Vaiti. On behalf of Kirin Advisors, I welcome you all to the Q4 FY26 conference call of Afcom Holdings Limited. From the management side, we have with us Captain Deepak Parsuraman, Chairman and Managing Director of the company. Good afternoon, sir. Welcome.
Good afternoon, ma'am.
Good afternoon.
We also have Mr. Kannan Ramakrishnan, Whole-time Director of the company. Good afternoon, sir. Welcome.
Good afternoon. Yeah, thank you.
Now I hand over the call to Mr. Kannan Ramakrishnan for opening presentation. Over to you, sir.
Yeah.
Is my screen visible to you?
Yes, I could see
it
that.
is.
Yeah. Yeah, we can move on. Yeah. Okay. So good morning all and welcome to this session. And I mean, as the preamble was given, I will run through this presentation quickly and then we will have an interactive session and we will take up the questions and we will, put our best efforts, to answer all your queries. Thank you all once again. So of course, and this is our vision and mission, and we are very happy to say that. And so far in our journey, we have kept our vision and mission very close to our heart and walking that path. And I'm sure that in the years to come, definitely we will make every the statement of our vision and mission comes true. Next. In the first few slides, we have tried to capture certain key highlights of financial year 2026, what we have done, and I'll quickly run through this. And very happy to announce that our airline has been awarded as fastest growing airline in the freighter market by Aviation Cargo Express in their award ceremony, and then we have been awarded as the top airline by air-to-air import in 2026, announced by Velena Awards, during the Velena Awards ceremony in Maldives. This award has been presented to us by the Maldivian, airport authorities. And Afcom Cargo also has been recognized as the Freighter of the Year during the same award, ceremony, which was conducted in 2026, beginning. And this is a very proud moment. And also, Afcom has forayed into Australian Pacific region countries with the strategic relationship with the Nauru Air Corporation belonging to Republic of Nauru. And these are all the announcements which we have made during the course of this year at various stages. Next. Then we have, these are all the pictures. We have started, newer routes apart from, our ASEAN region focus. Then we have started, the Sri Lanka and Maldives beginning of our, dry lease operations. And then last year, we also directly started, calling on, to the Middle East. And of course, these are all the pictures, when we called on for the first time. And from Dubai airport and from Bangalore airport, when we started our, the first journey, these are all the newer things, initiatives which we have undertaken, last year. Next. And the relationship with, the Nauru has blossomed into, much more. And we have signed up some key, the understanding memorandum of understanding to diversify our relationship with few more other business the opportunities, and those things have been communicated to the investors through our exchange filing. And this is the moments which we have captured when we were signing up the MOU with the Nauru team. Yeah. Next. And last year, we also have achieved certain very key initiatives. And we have got, the strategic capital infusion. We have done, the QIB, and for our, the phase 2 expansion of the fleet with the wide body aircrafts. And we also have, increased our capacity by the induction of, the additional third aircraft. And we also got designated, carrier certification from the Indian government, and our company also got credit rated. So these are significant milestones, what we have achieved, during the last financial year. Next. Of course, our USP is fast, flexible solutions for all cargo needs, and we are sticking to our basics. And that is the reason, we could provide interesting solutions to our freight forwarding community. And that's the reason for our growth as well. Next. Now we move on to the financial, the highlights. And in this slide, in the first part, we have captured, the Q4. And in the bottom part, we have captured the overall, the financial year numbers. The Q4 we have done. Q4 was one of the best, in the journey of Afcom so far, and 191.88 crores of, the revenue, which is 87.80% of, the growth over the same period last year, and which resulted into an EBITDA of 74.08 lakhs, which is a 51.52% year-on-year growth, and which is, which has left with 44.66 crores of, the PAT, which is 72.85% growth year-on-year for the quarter. And coming down, and for the financial year, whole year, the total recorded revenue is 587.72, which is 143.86% growth year-on-year, and which is, left with an EBITDA of 238.14 crores, which is a growth of 211.72%. And the EBITDA margin has grown by 40.52%. And PAT stands at 121.90, which is 230.05% year-on-year growth. And the PAT margin stands at 20.74, which is a 542 basic points, growth year-on-year. And I would like to, call the attention of the investors. This result is as per the Ind AS standard. And during the, beginning of the last year, we have volunteered ourselves that, to all the main board compliances. And we have, I'm happy to announce that we have, with the Ind AS adoption, we have completed, all the necessary main board compliances, we have incorporated, and now we are completely, as per the, secretarial standard in terms of results, declaration on a quarterly basis, and in terms of accounting standards and everything, as per the main board compliance, we have been practicing, and corporate governance also. And so this is the result of the Ind AS. Next. And this is the numbers, which are given in little detail. Net sales, as I, captured that, 190 is the net sales, and 1 crore 55 lakhs is the other income, which is nothing but, the Forex gain. And then there is a comparison, of the same period last year. And on the right-hand side, the entire 12 months, the period is given. And again, if you look at it, 583 crores is the total revenue recorded, and 461 is the other income, and majority of the other income is, the Forex and the interest income, what, we have earned through our deposits. And the EBITDA we have given here, and the net profit is given. And of course, the EBITDA, the percentage for the quarter and the EBITDA percentage for the year is given, and net profit is given, and the EPS is given on the on the bottom, and the EPS has grown from 16.47 to 48.65 on the yearly basis. Next. This is a quarterly comparison, and we have said that, 87.8%, the growth on the revenue quarter, quarter on quarter, and 51.52% growth on the EBITDA, and 72.85% growth on the net profit quarter on quarter, and an annual comparison, it is 143.86% growth on the revenue, and 230.05% growth on the PAT. Next. Okay, the same numbers, and along with the balance sheet figures, the total equity has, it stands at 457 crores. Total assets as 935 crores. And here I should, bring to your attention, as per the Ind AS standards, the leased assets are classified as, the assets and liabilities separately. The value of the, the assets are booked under right of use, under that classification, and the lease rentals are classified as a liability by charging the financial cost. And so, I mean, when we go deeper into the explanation, I will explain to you what are the impact on the leased assets and in the P&L as well as on the balance sheet. Next. Yeah, this is the cost structure, and this is the percentage we have given, and the percentage of this is a cost on the percentage of revenue is given. Direct expenses stands at 54.4%, and depreciation 12.3%, finance cost is 7.3%, employee is 2.4%, and others are 5.6%. And the total expenses stands at 434.6 crores for the whole year. Next. This is the lease structure deep dive, and the assets, the 3 aircrafts what been put into use, that the assets value is at 306 crores, and total lease liability for the entire the residual period stands at 338 crores, and the current lease due, which is immediately due within the next 12 months, stands at 49 crores, and lease finance cost is 16.1 crores. So 49 plus 16.1 crores becomes our the lease commitments for the next 12 months. And the aircraft wise, that bifurcation is given below. Next. This is a fundamental change, between the last year, the financials what we have released as per the, I mean, till the last quarter, even as per the GAAP, IGAP, and now it is converted into the Ind AS. And this is one fundamental change. In the IGAP, there was no concept of ROU, right of use of assets, and there is no concept of the finance cost being added for the lease rentals. And now it is under the Ind AS, that is completely taken out of from the direct cost, and it is given below the EBITDA as a right of use of assets into the assets, and the liabilities are shown separately. The liability is split into depreciation as well as the finance cost attributed to the lease rentals. Along with that, for the timing difference, whatever the forex gain or loss, that is also charged to the P&L. This is a fundamental difference. And here we have given a comparison between the IGAP and the Ind AS, how the profit, how that adjustments on a quarter wise has been carried out. And if you look at it on the last column, and for the quarter, as per the GAAP, the profit, the PAT stands at 46.31, 46 crore 32 lakhs. And whereas on the Ind AS side, after given all these adjustments, stands at 44 crore 66 lakhs. Next. Now coming to the Q4 operational highlights. Q4, from the dry lease, we have generated 160.49 crores of revenue. And Q4, we have done a lot of charters. And, of course, we all are aware that, the entire month of March, because of the impact of the war, a lot of, the disturbance in terms of the scheduled airline operations, particularly the airlines which were operating out of Middle East. And they have suddenly, have to stop their, their schedules, because of which there was a huge demand. And we have pitched in, and we have done our best to the best of our ability to provide solution for the stranded cargo. So as a resultant of that, we have done multiple the charters between Chennai, Colombo, Male, Chennai, Male, and all, in order to move the stranded cargo which are westbound. And also we have, done a lot of charters, from the eastern region, also connecting those, cargo to Maldives. And, from there, the cargo was moving towards the west. So if you look at it, in the Q4, the charters, pure charters are 400, stands at 415 out of the total number of trips of 602. And average kgs per trip is 764.32 tons. And average revenue per trip, stands at 29,295.64, US dollars. And average revenue per kg is 2.72 dollars per, as a yield. And we have done a weekly average of 23.42 trips per aircraft, per week. And our average cost, per kg stands at 1.84 US dollars, per kg during this quarter. Next. And this is the overall, the Riley's, the contribution towards our business, for the whole year. We have done a 528.71 crores of revenue. We have done, total 1,923 trips we have done. We have handled the volume of 24,353.42 tons. And we have done a pure charters of 1129. Out of 1129, if you look at the last quarter itself, I think, 1/3 of it has been contributed in the last quarter itself. That was the kind of, the charters, what we have done. And average kgs per trip stands at 12.28 tons. And average revenue per trip stands at 31,243.19 USD. And average revenue per kg yield stands at 2.54. And weekly average number of trip per aircraft stands at 19. And the cost per kg stands at 1.58 US dollars. Next. Next. Now here we have tried to compare. We have taken Chennai per se, Chennai airport per se, and we have done, we have done a deep study about, the cargo, international cargo volume handled by Chennai airport. Happy to say that, Chennai airport has grown better than the national average growth recorded at various other airports. I mean, in terms of international cargo volume. And we are proud to say the main constituent of this growth has come from Afcom, because we are based out of Chennai, obviously. And the last year, Chennai has transacted 3.26 lakh metric tons, and which is a 12.5% growth year on year, and 12.9% growth cumulatively between April to February, and which is a 2.3 times more than the national average. And then next. And this slide is, gives a little more deeper, in terms of the volume. 242,989 metric tons was, transacted between April, Jan in 24-25, which has grown to 274,608, 68 metric tons. And similarly, between April to Feb, 265,000 has grown to 398,000 metric tons, which is a 12.9%, growth vis-a-vis the same period. And this is all India cargo data. And this is the international cargo. And the international growth in Chennai, as I mentioned, stands at 12.5%, whereas international growth all India level stands at 5.4%. Chennai outperformance by 2.3 times. Domestic growth also, Chennai has recorded 10.8% vis-a-vis 7.4% growth, across the all India level. Of course, we are not concerned about the domestic air cargo growth, since we stay, as an international carrier. But that gives a perspective about, how the air cargo volume, grows in our country. Next. Then this comes to the, Afcom's performance on the quarterly basis. Sorry.
This is the difference with it.
Can you move, ma'am?
Previous slide, ma'am. Yeah. This one.
Yeah. Okay. The quarterly performance and revenue and flights growth, has been captured here. This data is pertaining to the Afcom's performance. Quarter on quarter, how we have progressed in terms of revenue has been captured. And Q2 recorded a revenue growth of 7% with a 20.2% of, growth in the trips. And Q2 to Q3 and Q3 has recorded 15.96% of growth in the revenue with a 12.3% of growth in the trips. And Q4 has recorded a revenue growth of 15.94% over Q3 with a 19.92% of growth in the trips. The growth in the trips here and on the right hand side on the chart, if you look at it, we have done 602 hour, trips, and we have, clocked 1,490 hours. And this delta is because that, during the Q4, we have done multiple, short charters, that is, between Chennai, Colombo, Male. These are all the shorter sectors. And that's the reason that, though our trips have gone higher, the resultant, number of hours of total number of hours of usage on the aircraft has not, proportionately increased. Next. This is our average aircraft utilization Q on Q, VT-AFO, VT-AFN 2 aircrafts. And Q1, it was used between, AFO was used for 6 hours on an average per day. And AFN was used for 4 hours on an average per day, which has grown to 9 hours. And, on Q3, AFN has done around 11.45 hours, per day. And AFN has done around 9 hours per day in the Q3. And in the Q4, obviously, we have to, judiciously use both the machines. We can't, flog only one machine. So, that planning, is being done by our planning department and engineering department. And basis which in the Q4, we have used AFN more and we have used, the AFN, relatively less. And this is the resultant of that. And at the peak, VT-AFO has done 11.45 hours per day. VT-AFN has done 10.51 hours per day. And here we have also given some comparison. The industry best is 10 to 14 hours of utilization per day per aircraft, which is from the dedicated freighter side like FedEx and DHL. And the Asia Pacific average stands at 7.9. And we were somewhere middle between, Asia Pacific and the industry best. And we will strive hard, to improve upon as the additional aircrafts join our fleet. And this is the cargo ton kilometers growth.
Next slide, ma'am.
Ma'am, next slide. This is the cargo ton kilometers in millions. And in Q1, it was 7, grown to 8, 12, and 11. And the Q1 to Q3 was 82.5% growth. Q4 to Q3 is 5.8%, is not a seasonal slip, but this 5 this thing, because we are not, obviously, again, the resultant of shorter sectors is playing here. So number of trips are more, number of hours, the cargo was carried is less, and the cargo ton kilometers is the resultant of this both. And that's the reason, there is a slight dip. But at an average, IATA global CTK growth stands at 11.4%. And our company is performing better than that. That is a key underlying factor here. And monthly revenue and yield trend we have given. Average, we
Next
started.
slide, ma'am.
Ma'am, next slide. Yeah, I'm looking at here. That's a problem.
Absolutely.
Okay, in this slide, we have given month-wise, the revenue. And here, month-wise yield we have given. If you look at it, a month-wise revenue stands at around, in the range of around 40 to 44 crores. And the yield, per kg stands at, somewhere around 229 rupees. Next. This is an important slide. And we have given, the yield per kg analysis, charter versus weight versus industry. And the yellow line is the charter. And the red line is the industry average as per the IATA benchmark. And the solid, blue line is the weight. So if you look at it, I mean, our utilization of the aircraft in the initial stages on the Q1 was low on the charter, more on the weight basis. But slowly and gradually we have improved, and the what do you call the charter penetration, and we have averaged out. We have arrived at a good balance between the charter and the weight, and that is also the resultant of the market, the dynamics and market demand. But be happy to say that our yield per kg stands better than the IATA's industry average, which is 222 rupees. Next. This is a quarter on quarter in terms of the performance, number of trips, how it has grown, charge weight, how it has grown, and the revenue per kg. This is in INR, how it has grown. On the right hand side bottom, it is given in the USD also how it has grown. Next. Coming to the quarter 4, the cost analysis. Quarter 4 alone, the dry lease cost stands at, fixed cost stands at 37%, variable cost stands at 54%, and the other cost and corporate overhead stands at 9%. And again, if we dwell deeper, out of the fixed cost, 39% is towards the lease rentals and 38% is towards the maintenance reserve. This is also a very significant, change in the adoption of Ind AS. This maintenance reserve is a per hour basis. We allocate a certain amount of dollar for the future maintenance, which is a reserve what we created. Earlier, it was treated in the balance sheet, but now as per the Ind AS, it is it is straight away on the year of we provisioning. It is charged to the P&L, and in the year when we draw for our usage for the service, it is again charged back to the P&L. So that's why maintenance reserve stands at 38%. The insurance is 5%, and other employee costs are 7%. And again, variable cost, if we 54% of overall cost stands at for variable, and that if we dwell deeper, 59% of that variable cost is belonging to the fuel, and the trip support is 25%. Ground handling stands at 9%. Commission stands at 5%, and then the airport related charges stands at 3%. And the other cost, if we dwell deeper, 9% is the overall contribution of the other cost towards the 100% cost. That 9%, if we deep dive, 11% belongs to finance. Forex gain and loss, here it is, the loss is, as per the Ind AS impact, stands at 24%. Amortization and depreciation stands at 29%. Again, the Ind AS component of the lease rental, plays a role here, and other expenses stands at 36%. Next. The same thing for the overall year. Overall year, the cost stands at, the 100% cost is split between the fixed, variable, and other corporate overhead. 39% of our overall cost is belonging to fixed cost, 48% belonging to variable, and 13% belonging to other cost and corporate overhead. Now, this 39% on a yearly basis, if you look at it, 36% belonging to aircraft lease rental, 38% is maintenance reserve, and 13% is crew salary and paradigm. 6% stands at insurance, and 7% stands at other employee cost. And other employee cost is directly involved to the operation, but they are not the flight crew. So they have been split as the other employee pool, and their cost is captured here. And variable cost, if we dwell deeper, 62% of the cost, belonging to the fuel, 24% is the trip support, and 10% is the ground handling, and commission is 3%, and the other the airport related charges stands at 2%. And other cost, if we dwell deeper, 9% is finance cost. Forex gain and forex loss is 24%. Depreciation and amortization stands at 30% and other expenses at 37%. This is the entire cost breakup. Next. To sum it up, in the last 3 years, this company has grown 4 times in terms of revenue, 4.8 times it has grown in terms of net profit, 6.54 times it has grown in terms of EBITDA, and the EBITDA margin has grown from 24.55% to 40.52%, and the PAT has grown from 17.17% to 20.74%. Next. And this is the detailed last 3 years comparison. The balance sheet and the P&L, the numbers are given, and this is there. Even in the exchange filing, it is there. If there are queries, we will address it. Next. Same again. Next. The cash flows has shown a good positive, the improvement. Cash flow from operations stands at positive 36 crores roughly, and cash flow from financing is nothing but the other the equity generation activities and the cash flow from investments. So this is given, but the positive thing is what I want to communicate here is that cash flow from operations has turned the positive, and with close to 36 crores of the positive cash flow from the operations. Next. There are some of the key ratios. Return on equity stands at 26.69%. Return on capital employed stands at 35.62% for the current year, and there is a good fixed asset to the turnover ratio, and interest coverage ratio also is at a healthy range, and the earnings per share has increased to 48.65 rupees in the current financial year. Next. We have given a comparison of our market performance, and from the day we have listed our company and how the price movement has happened, and that is also has been captured in the bottom slide. Next. This is the summary. Our endeavor is to provide holistic cargo solution to our customers, to create a reliable on-time performance with focus on safe flight operations, to build partnerships with the air logistics supply chain for seamless movement of cargo, and our vision to be the most admirable cargo airline by all stakeholders. And we will continue to strive hard to achieve all these, the 4 pillars which drives us constantly. Thank you all.
Thank you, sir. We'll now open the floor for Q&A. Before we start with the Q&A, I request all participants to limit their questions to 1 question each and wait back in the queue so that everyone gets an opportunity to interact with the management. Yes, Mr. Priyanshu, please go ahead.
Hi, am I audible?
Yes, you're
sir.
audible.
Hi, sir. Congratulations on good set of results. Despite geopolitical tensions, we have grown like really phenomenal this quarter as well. Sir, as the limit is only for 1 question, I just want to ask on the fleet size side, as we are planning to induct 3 flights last year, but we couldn't able to because of the regulatory norms and other things. When we are planning, and what is the future looks like for the inducting of other airlines on the way?
So, you're right. We're in a plan of inducting 3 more. The 3rd is being inducted. We are in the process of inducting the 4th and the 5th aircraft, which will happen shortly.
Sir, like any timeline would you like to give still for that?
So all I would say is that they will be operation. The 3rd aircraft is operational. 4th and 5th will be operational definitely before the next quarter.
And sir, for the just a follow-up, like after these two flights, we are also planning to induct two more flights, which will be significantly having a much more volume than the. So like
Yeah, we are planning to induct the wide bodies, that Boeing 777s.
yes, sir. So what will be the timeline for those two?
Sure, the timelines for those two would be, we definitely will have two by the end of this year, but for conservative principles of functioning, we're looking one to be operational in the last quarter of this financial year.
So like by the end of FY27, we can expect those two
By
will
the
be.
end of the calendar year, this year, it will be inducted. So at least one aircraft will be operational by the end of FY27 last quarter.
Okay, sir. Thank you, sir. That's all from my side. I have.
Thank you so much.
Thank you, Priyanshu, sir. Yes, Ms. Achal, please go ahead. Ms. Achal, kindly unmute yourself and go ahead.
Q&A questions இருக்கு இல்லையா அது என்னன்னு கொஞ்சம் டவுன்லோட் பண்ணி பார்க்கலாம்.
Mr. Chintan, please go ahead.
Thank you. I hope I'm audible.
Yes, sir.
So, Kannan sir, Deepak sir, congratulations for fantastic set of numbers.
Thank you, sir.
Great to see, cash flow positive. So, just want to understand, our trade receivable actually increased this year. So, how much is the more than 6 months old trade receivables do we have on the books right now?
Sir, the trade receivables actually has not increased. In fact, if you look at it, the pure terms, it has come down only because, the last year balance sheet period and this year, if you look at it, the month-on-month average has gone higher. And of course, we all know that, the March was one of the, very big month for us. And obviously, the credit norm stands at, the 45 days, as per the IATA. And if you keep that into consideration, the higher numbers, what we have recorded between the last quarter, our the receivable stands at around 60 days only. But on a overall, if you take the entire turnover divided by 12, and that way, if you look at it, it stands at only 80 days. And but that's not the right comparison because we have to go by the recent the billings. So basis that we are well within the control. And to answer your second question, that we don't have any outstandings which are more than 6 months.
Okay. Sir, on the expense sides, we saw that the fuel cost went up, right? But recently there was this, we got the designated Indian carrier status. And it also helps us reduce some of the, the VAT from 7% to 5 to 7%. So has this already been included in Q4 numbers, or will we see this impact coming in on the next quarter onwards only?
So there was the impact of that, to the extent, in the month of March was there. And, but overall on a yearly basis, if you look at it, it was very less. And again, the designated carrier VAT benefit, is applicable, as we fill fuel for our outbound international trips, from any of the stations within India. So the contribution or the benefit, percolated into the cost, is less, but there was definitely an contribution, because of the designated carrier. But on a entire benefit, for that to reflect, this current financial year will have that entire impact of that.
And so, how much
Sorry to
impact can we
interrupt,
see on
Chintan,
this?
sir.
It's just a follow-up question on this.
Sure, please go ahead.
So, how much impact can we see on the upcoming numbers due to this?
As I mentioned, sir, it will have an impact of close to around 5 to 7% on overall cost of the fuel.
Okay, all right. Thank you, ma'am. I'll go back into the queue. Yeah?
Thank you. Mr. Smith, please go ahead with your question.
Hello, good afternoon, everyone.
Good afternoon.
Good afternoon, sir.
Yes, so I was tracking one of our aircraft VTA FN. which did not took any flight during last couple of weeks. So is it because of maintenance or something else?
There are two factors here, sir. Yes, the aircraft was down for a couple of days for maintenance, is point number one. I don't know where you've been tracking this, sir, because I don't want to. I mean, it's not my business to talk about the accuracy of these tracking mechanisms which are currently available, which in my view is a little inaccurate because of the West Asian conflict.
All right, sir. Understood. All the best.
Thank you, sir.
Thank you, sir.
Thank you, Smith sir. Mr. Chaitanya, please go ahead with your questions.
Hello. Hi, sir. First of all, congratulations for the good numbers.
Thank you, sir.
And,
Thank you, sir.
and sir, my first question is whether the third aircraft is operational or not.
Yes, sir,
And
it is
what's-
operational.
It's operational.
Yes, sir.
Okay. And
Thank
sir,
you.
whe-
Go
and
ahead, sir.
about whether what's the expectation for fourth and fifth aircraft?
Now, as I said, sir, before the next quarter of this financial year, it will be operational.
It will be operational.
Yes, sir.
And so whether they have arrived in India?
No, sir. No, sir. They are on the way.
Okay. Any expectation like when they can be arrived in India? If you can tell
Soon,
that.
sir. Very shortly.
Okay, sir. That's great, sir. And so one more thing, I mean, due to some unforeseen circumstances, whatever, our financial year 25-26 top line expectation was approximately 1,000 CR, right, sir? But during the AGM, it was revised to 700. And I mean, due to aircraft issues, whatever, I mean, the delays maybe, the
There's also the
unavoidable delays.
other.
But after that, again, I mean, it fell to our expectation was 700, right? But still, it was around 583.
587.
583, sir. But if you look at it, sir, I mean, we have, with the available two aircrafts, and as you rightly said, that with the available, the challenges in terms of, additional aircraft impact. So, but we have, performed well. We have performed beyond optimum level. And that's the reason, we could, record this kind of a number with only the two aircrafts actually. So, which is also, makes something very clear that, as the capacity gets expanded, definitely, we will be in a position, to achieve the numbers, whatever we have committed, earlier.
And we'll be there soon, sir.
Yeah. Yes, sir. So I'm totally aware of that. And the numbers are really good as far as financially 25-26 is concerned. And also, like as conveyed by you in the press release, in March 2026, multiple orders were even more orders were received because of all the disturbance worldwide in the March, right?
Yeah.
But still,
Correct,
I mean, what was the major reason between this? And as part of this, I mean, hopefully in this particular quarter and this coming quarters, multiple new aircrafts will be arrived. So, what are expectation for financial year 26-27 for the top line?
You're asking for the guidance for the next financial year, sir?
Yes.
It's very simple, sir. I mean, we have put up some numbers, with the available resources, and
Yes,
as the resources, even it becomes double, you can extrapolate it. It's going to be minimum, double. But
actually, the resources are more than double. So
yeah, I'm saying that on a conservative estimate, also, if you look at it,
it'll be much
Okay,
more
sir.
than double, sir.
yeah.
It will be much more than double,
Thank
and
you.
it's on the conservative side that we're talking about.
Yes.
Yes, sir.
Okay.
Sorry to
That's
interrupt,
great.
Chaitanya sir. I request you to wait back in the queue.
You guys are doing, sir, just one
Thank
thing.
you.
You guys are doing, sir, really great. Thank you.
Thank you,
sir.
Thank you, sir.
Yes, Ashish sir, please go ahead. But before you go ahead, I please request all the participants do not ask repetitive questions. Also, please limit your questions to one question each, as we have too many participants waiting in the queue. Thank you, Ashish sir. Please go ahead.
Yeah, hi, sir. Am I audible?
Yes, sir.
Yes, sir.
Yeah. So my query is on third aircraft and second aircraft. So, on the side you said all good. that this is not sure or accuracy is not confirmed, but yeah, we do track. And I found that the third aircraft was not running and second aircraft is not running from last 1.5 months. So can I assume that data is wrong and it is running perfectly like other plane, the PTAFO is running?
Two things, sir. One, two things, two parts to your, two answers to your question, sir. One, my personal opinion is the inaccuracy of the data. More so, the inaccuracy is heightened because of the West Asian conflict. The second part, yes, both the aircraft are flying. With specific mention of AFJ, we are holding on to the aircraft quite a bit and not operating it primarily because I don't know if I can say it with regard to any of the UPSI, but we are at the threshold of a large contractual flying into the Middle East. From the end of this month, the aircraft is fresh out of C check, and I will be able to carry out as much as 10 to 11 landings on that aircraft per day. So it's just being reserved for that. Sir?
Hello, Ashish sir.
Yeah, sorry. Yeah, and my last question is 19 flight it was we have achieved per aircraft per week last year. So can we assume the same number or what the target for this year? If we assume like 3 planes, what is the number? 19 flights we assume or it will be a lower?
Sir, that is our last quarter. Sir, I mean, this will definitely, will get further optimized, sir. If you look at that is the reason, in this presentation, we have given, the aircraft wise, the progression of its usage over the quarters, if you look at it, and is a consistent improvement. And as, the fleet gets expanded and, the majority of the aircrafts, will go beyond this threshold. And even at this level, we are performing better than, we are performing somewhere between the what you call global average and the Asia Pacific average. But we will definitely have the capability and potential to push it further, which we will do that.
Okay, thank you, sir.
Thank you, sir.
Thank you, Ashish sir. Yes, Mr. Rohit, please go ahead.
Yes, thank you for giving me the opportunity. My question relates to aviation turbine fuel prices. As we know, ATF prices increased by more than 100% from April onwards and remained elevated in May as well. So could you please elaborate on how the company has managed the significant cost increase? Additionally, what portion of this increase has been passed on to the customers through pricing adjustments?
So to answer your question, in our industry, fuel cost is a direct pass on to the end customer. It is done by virtue of a fuel surcharge added to the freight charges, which is also common in the passenger industry as well. You will always see a line item fuel surcharge. So the fueling companies announce their monthly fuel price per station, and the surcharge is a direct reflection of the same, and 100% of the increased fuel cost is passed on to the customer.
So we are not expecting any margin decline in this quarter. We will be maintaining.
No, sir. No, sir.
Okay.
Maybe there is an increase in the margin primarily because of increased fuel surcharge. Air tickets are becoming more expensive, so air travel is getting impacted. However, cargo is not affected by that because it's purely B2B. So a little bit of drop in belly capacity cargo can only enhance the hardened freight rates.
That answers my question. Thank you so much and all the very best.
Thank you, sir.
Thank you.
Thank you, Rohit sir. Yes, Mr. Bharat, please go ahead.
Yeah, good afternoon, Captain G and Karan Ji, and congrats on great results.
Good afternoon, sir. Thank you, sir.
Slightly long-winded question. We can see that there are, of course, in the presentation you have mentioned that the impact what you had on the Chennai airport's growth in the cargo volumes, and given that recently you have also tied up with the Noida airport and AI SATs, and how do you see the overall cargo ecosystem benefiting, because Indigo, one of the largest carriers, has stated that the cargo opportunity in India is going to be phenomenal over the next 3-4 years. So, how do you see your role with respect to this movement, and how does Noida help you with respect to your global expansion?
Sir, two or three things come in here, sir. Not only Noida Airport, of course, 17th is the inauguration of the cargo terminal at Noida Airport, and Afcom will be the first aircraft to be cargo aircraft to land there. So that's point number one. Now, as far as these airports are concerned, sir, one of the growing factors here has been the infrastructure for freight movement through airports. So now there has been all the airports are getting very highly mechanized, advanced cargo logistics systems. The cargo warehouses are growing in mammoth size to handle the projected next 4 to 5 years of cargo movement in India and through India. So yes, Noida is going to be a big factor. And with the commencement of the international operations, we also plan to enter the Delhi operations to various international destinations, which is a big gateway for us, as also Mumbai.
Fantastic to hear this, sir. And one follow up. Just wanted to check the USD, the INR depreciation would have a significant benefit in FY27 in our overall fares. Is that a fair understanding? So you will see those benefits flowing into your revenue
Yes, sir.
in
As
this
you
year.
saw, there is a 1.55 crores of forex gain also in our balance
Sure.
sheet.
Got it, sir. Got it. Thank you very much, sir, and all the best.
Thank you, sir.
Thank you, Bharat sir. Yes, Neeraj sir, please go ahead.
Hi,
Hi,
am I
sir.
audible?
Loud and
Yes,
clear,
sir.
sir.
Yeah. So my question is for Kanan sir. Kanan sir, our current tax for last year was 36 crore. Out of there, 33 crore is still outstanding to be paid. Why are we paying such a high interest cost? Because that interest expense is even not tax deductible. So effectively, the cost come to 16-17%. And we have 62 crore of cash in our books, and also we have a positive cash flow from operation. We should pay advance tax and reduce this burden.
We have paid some advance tax, sir, but as you rightly pointed out that it is not to the extent of our entire this thing, and this is definitely a point of improvement which we are working on it. Current year, we will be addressing that quite positively.
Sir, but 33 crore outstanding, so we have paid only a portion of the advance tax, like that too, I guess, mostly from the TDS deduction. So I will
No.
sincerely request
We
that
have
all
paid.
good companies should not pay.
We have paid physically. Apart from TDS deduction, we have paid physically also, but it was not corresponding to the overall tax liability. What finally we have landed upon with. So definitely, this is a point which we will work on progressively in the current year.
Okay. Thank you. All the
Thank you.
best.
Thank you, Mr. Neeraj. Yes, Imran sir, please go ahead.
Yes, sir.
Hello.
Thank you for giving retail investors this opportunity to being part of this tremendous wonderful journey. I have been tracking the company from early 2024 when you were initially discussing the IPO with investors. So very very thankful for you to giving retail the opportunity to participate.
No, thank you for trusting and being with us, sir, and supporting us. Thank you.
Sir, my questions are largely, been answered. If you could, maybe give some more color on the uh, air turbine fuel, right? Because the impression that we have as an outsider is that the fuel cost has gone up dramatically higher, right?
Correct, sir.
So if you could reassure us that you would be able to, pass 100% of it and it would not impact our operations at all, because the times are really turbulent and it may prolong for maybe for some more time. So if you could just reassure us on that point and maybe help us it a little better, because that's the biggest elephant in the room right now.
Okay, to answer your question, sir, we'll split that into two parts. Now, obviously, the industry practices that, complete pass on of the fuel fluctuations, to the end user through the freight forwarders as a fuel surcharge. This is the industry practice, and that's what we also have been practicing it. But your point is very valid. The price increase is quite substantial. When it becomes substantial, whether the industry will absorb it is the question what you are trying to put across.
Yes.
Now the question, I mean, your point is valid. Now let us look at what other options the industry has. The other option is the sea. Now the sea fares also has consistently is on the moving upward north because of the same issues which have been faced in the Persian Gulf as well as in the Red Sea, and the shipping the industry is also witnessing the similar kind of an issue because of the vessels are not freely moving, the containers are not moving, the cost there also is really is going increasing every day, and so eventually the industry do not have alternate mechanism if they have to wish saying that air cargo has become expensive, so I will not use it. So that is why we say that this is being absorbed by the industry, and we do not foresee a challenge that it will be what you call not being absorbed by the industry because it is an essential need. Point number one. Point number two, within the given frame, this designated carrier, the benefit is also plays a role because we stands to gain because of this certification, so that within the escalation we try to remain at the international level. We are not losing any benefit, or we are not at a disadvantageous position because of the higher VAT we have to pay here in India. So that is also been nullified. So that way that we stands at a neutral level, and we are very confident, and we are also experiencing. And if you look at it, the jump between the March 31st to the April 1st is one of the steepest. The earlier, what was available as 85,000 rupees per KL has gone higher to 2,24,000 per KL. But because of our, the designated carrier certification, the 2,24,000, the fuel was offered to us at 1,69,000. That's the delta, what we were saving. And even 1,69,000 vis-a-vis, 85,000 was a very steep increase. But that itself, in the month of April, the market has absorbed it because that much of pending cargo is there. That is essential. But it has tapered down in May. It has got further tapered down in June. And, we hope that, at some point of time in the next quarter, it will settle down, to a reasonable level.
Got it. Got it. Just one last clarification I need. So what percentage of our billing is in USD? If you can share that figure, if it is possible.
60% and above our billing is in USD, sir.
More than 60%.
Yeah.
Got it. Got it. And sir, just a request. I have been trying to connect to you guys through, your IR channel, through Mr. Vaidyanathan. If you could allow maybe a meeting per one-on-one or a virtual call, I think it would be very helpful because I don't want to waste time of others because I have a bunch of questions. So I think that would be very helpful. Thank you.
Definitely, sir. If not, a physical meeting, at least we will try to connect virtually, and we will definitely, your point is noted, sir.
Sure. Thanks.
Thank you.
Thank you,
Thank you, sir.
Imran, sir. Mr. Chetan, please go ahead.
Can you hear me?
Yes, sir.
So my question is on the new aircraft addition, 2 narrow body by the Q1 of next year and 1 wide body by March 27. So on the financial liability front, are we sufficiently funded with respect to our receivables and cash on hand, or any further fundraise would be required?
Sorry, sir, I didn't get the question. Could you repeat it with regard to the fleet acquisition?
No, the fleet to be added in financial year FY27, two narrow body to be added in Q1 and one wide body by end of this calendar year. So my question is, have we paid all the necessary deposits and outstanding with respect to the addition of those aircrafts? And are we sufficiently funded to add all the four aircrafts to be added? And any
Yes, sir. Yes,
any
sir,
funders will be required by at your end from the current levels?
No, sir. We have been sufficiently, taken care of it. In fact, the narrow body addition of, the fourth and fifth aircraft, already everything has been done. It is the final, the once the aircraft comes here, whatever, the necessary, the customs duty and some other smaller expenses need to be, expensed out, and for which we are completely covered. Point number one. Point number two, with regards to the wide body aircraft induction, we have raised, the equity through preferential allotment of shares and QIP, and that will take care of, the expansion of, addition of, the 777-4 units, and starting from this calendar year end onwards. So we don't require any further, the fund rise, for the fleet expansion, whatever we have envisaged and communicated.
All right. I have more questions. I'll join back to you. Thank you.
Yeah.
Thank you, Chetan, sir. Yes, Mr. Pinkesh, kindly go ahead.
Hello.
Hello.
Yes.
Hi, Mr. Pinkesh. Please go ahead, sir.
Yeah. Good afternoon, sir.
Good afternoon, sir.
Yeah. So, sir, my first question is that in terms of what you call the trips, I was just looking at our Q4 data. So, we realized 2.7, our yield was $2.72 per kg, while our full year average was $2.54. Now, considering the increase in the freight rates in the fourth quarter, we were expecting the yield to be much more higher. So now here, does this higher proportion of pure charters come into play? So if you can just explain the dynamics of the charter, how does that play into the yield? Yeah.
So in the Q4, if you look at it, 415, the charters we have done.
Yeah.
And out of the total 602 trips, and which means that, we have done more charters. And, yes, of course, after the outbreak of the war from the March 1st onwards, there was sudden, the change and sudden, the demand build up, and, the panic set in the market. And we had to, oblige, to the industry, because we are not here for only the two aircraft operation. We have a fleet plan, and we are getting additional aircrafts, and we need to be closer to the market, closer to the fraternity. So we have done, the more number of charters. That has helped the industry. That has also, helped us, to rotate our assets, quite efficiently. And within the given opportunity, this is the maximum what we can able to do it, in terms of pushing the volume, pushing the revenue. Yes, the market or the yields were hardened in the month of March. If we have done, the more number of volume based or the weight based, the cargo which we generally do, if we have done that, maybe, our yield would have been better. But with the only two aircrafts, with the set of crews what we have, with the kind of demand and pressure, and also the trying to encash the opportunity of providing solution to the industry when it is stranded, this is the best what we would be in a position to do that, sir.
Okay, fine, sir. That answers. And secondly, sir, can you give us the breakup of the revenue by cargo type in terms of ODC, general cargo, hazardous, and perishables?
I'll get you that thing, sir. I mean, that data was not complete, that's why I have not added that into my slide. And, I will get that, shared with you.
No problem, sir. And lastly, one last thing. When we say fuel is a pass-through, but Q4, our EBITDA margin was lower than Q3. So is my understanding correct that optically this looks lower because of the higher fuel cost? And yeah, is that the reason?
No, sir. I mean, the India's adjustments are also there in that. That is why, quarter-wise build-up, I have given it in a slide. If you look at it, then you will see that, the EBITDA remains the same because the huge impact of the Forex loss has been built into that. And if you have to, I mean, we'll have to remove that and see that, to arrive at a proper EBITDA margin.
Thank you, sir. Thank you.
Thank you. Yeah.
Thank
Thank
you.
you, Vinay, sir. Yes, Surendra, sir, please go ahead.
Hi, sir.
Hi.
Yes, sir.
Yeah. Yeah, thank you, sir. Thank you for the opportunity. And firstly, congratulations for the fabulous set of numbers. It is not less than a blockbuster movie for me. So
Thank you, sir.
Thank you.
yeah. So I have seen that we had a great due to Middle East crisis in the month of March. So the same problem has been happened in the month of April and May. And so are we seeing same kind of demand till April and May? And also the second question, sir, I see the revenue run rate for the month of March 2026 is across 60 crore. And can we see the same kind of monthly run rate at the time of additional demand? And what's the monthly revenue run rate at the normal times?
Sorry, April and May, definitely, yes, the demand, because the war did not get over in the month of April, the demand was there. But please understand that, March, this was something, completely the industry has not expected it. A sudden withdrawal of, the capacity from the market created a panic. And so after months' time, the people could understand this, the situation, and they could plan it better. So that mad rush and the panic, and that also another important thing, March was the month of Eid, in the Middle East. And suddenly the entire movement of the cargo got stranded and they were dependent on a lot of imports. So these things have got little bit ironed out in the month of April and May. So I would say that, it is it is not at the same level of the panic, what was there in the month of March, but it is definitely better than, the average, and the demand, is definitely much better because the problem is not out of the ground, completely.
Sir, also on the monthly revenue run rate at the time of additional demand and normal demand, can you answer for that, please?
So the Q4, if you look at it, the between the what should I say, Jan, Feb, and March, there is close to around 20 to 23% of the higher the performance in the month of March itself compared to the average of Jan and Feb actually. And so that was a kind of the additional demand, what was there available. And now going forward, I would say that in the month of April and May, it is not at the same level, but it is definitely better than the monthly average.
Yeah. Thanks.
Yeah.
Thank you, sir.
Okay. Thank you, Surendra, sir. Yes, Nishant, sir, please go ahead. Before you go ahead, sir, there's a small announcement. As we have time constraints, we'll be taking only 3 to 4 more questions. Yes, please go ahead.
Sir, good afternoon.
Good afternoon, sir.
Sir, can you comment on the capacity utilization of existing 3 aircrafts? I understand the third aircraft utilization may be lower and would possibly start in coming months. But with the expansion in existing capacity, means how much utilization can be increased in the existing fleet size? And when the fourth and fifth plane will be coming, how do you see their capacity expansion in coming quarters also? Can you comment on that, sir?
Yes, sir. I will just provide you the capacity.
Current capacity utilization.
So for the last year, the capacity utilization stands at, overall year stands at 81.42% for the last year. And obviously that, when I say 81.42% it's on a gross weight basis. And definitely, going forward, there is an opportunity to move further. And this 81.42% is also because the impact of the charter. And in majority of the domestic charters, it is only a one-way, the cargo. Return leg, is empty because the client pays for the entire round trip. So my trips are more, but whereas the cargo what I have carried was less because one way it was empty. So that is also the resultant of this.
One clarification thought. As the new planes will be coming in next quarter, it will be function from next quarter, I believe. So how
Yes,
do you
sir.
see their capacity utilization rising in coming quarters?
It will be, sir. It will be. And again, it has a direct correlation with regards to the number of charters what we perform and number of non-charters, the regular, the charge based, the weight based, the trips what we perform. It's a resultant, it's a combination of that. What is the percentage of contribution from the charters will alter the overall, the percentage of cargo utilization, I mean, the capacity utilization. But nevertheless, what is more important is we make a balance between the charter and this, and we concentrate on the revenue generated per trip, which is more important. And we are we are concentrating on the yield per kg. These are all the very vital, the metrics, what we progress on that.
Thank you, sir.
So to put it in brief, sir, the demand is high. We are short of capacity. And every aircraft that comes, every kg of capacity that we put in will be fully utilized.
Thank you, sir. Thank you.
Thank you,
Thank
sir.
you so much, Nishant, sir. Yes, Mr. Divyanshu, please go ahead. Mr. Divyanshu.
Thank you.
Yes, sir. We can hear you, sir.
Yeah, congrats on the good set of numbers, sir. I just
Thank you,
have
sir.
one question regarding the new flight, right? The new aircraft that has landed. What is the utilization? And if you can just throw a light that in this war situation, is it benefiting or it's like the realization or the you can say the number of flights that you are flying is adversely impacted?
So as you will see from our March activity, definitely the war has provided us a larger opportunity. The demand is higher, freight rates have hardened. With regard to the third aircraft, yes, sir, the capacity utilization will be large. Currently, the capacity is being reserved, as I told earlier, it's fresh off C-check. We have a lot of contracted flying starting from the end of this month. So I'm kind of low utilizing that aircraft to put it on that sector, fresh off C-check, so it'll operate for the next 6 months. We can flog the machine. So that's why it's being held for.
And is it would be like that our aircraft 1 and 2 is used to be for Malay? Is it be from a particular route? If you can just give us a highlight,
No,
like
no, sir. The aircraft will not be dedicated to a route, but it will be rotated across the route to have average utilization of aircrafts across the network. But when we have a aircraft fresh off C-check, that would take a higher load. With the
understood,
increased flight schedules from the end of this month.
understood. Thank you, sir.
Thank you,
Mr.
sir.
Divyanshu, sir. Mr. Prasin, please go ahead.
Yeah. Am I?
Yes,
Hi,
sir.
sir.
Yes, sir.
So first of all, congratulations on a great set of numbers, and we trust you as a management, and you are doing a great job for that.
Thank you, sir.
First question. So just question is on the fleet size. Like we are planning to, as you said, add 2 flights, maybe B737 by the end of next quarter, and the remaining ones B77, B777 by the end of FY. I mean, not calendar year 26, maybe FY 27. That is what. Correct me if I'm wrong. So, by going by that way, I mean, if I'm not wrong, just correct me if I'm wrong. That current revenue per flight, I mean, it's close to 20 or 22 crores per month. So if we add those capacity expansion and in the next year, maybe in the middle or maybe as you guided, so I hope that the new fight B777 will have a 5x more capacity than the existing one. So the revenue potential, as in the per month revenue potential of that of those two B777, and then another two will be inducted. So should be at least 100 CR per month, like that. Correct me if I'm wrong, or I mean you can just comment on this part.
So we can't take a direct, multiples of, because the capacity is 5 times more, so the revenue also 5 times more. It is the function of, how much we are going to utilize that aircraft. These are long haul aircrafts, which flies into the sectors which has got, 10 hours plus 12 hours plus of, the flying, requirement. So when you fly long haul, the rotation time also takes that longer. So each of the trip, a complete round trip, it will take around 34, 35 hours. Plus, while it comes back, we need 4 to 5 hours for engineering, to make it, airworthy, again for the next trip. So in all that, we plan to utilize that aircraft, 14 to 15 rotations per month. So given that, and the sectors what we plan to operate, and and with the cargo load factor taken conservatively as 75%, we we estimate, each of the aircraft, that 777, will provide an average, the revenue of 3 times from the current level of, the 737-800s, the revenue, recorded revenue.
Okay, got it. So, and just one follow-up to that, like as you mentioned, like so beat that as you mentioned that currently the capacity utilization is close to 80% it's something, and because of this war, you are having a lot of demand, right? So I'm just hoping, I mean, obviously we all hope that the war will end soon. So once the war ends, so I mean, can it have an impact on our revenue per flight? Because at that times the sea routes will be open. So will it have any impact on the existing one? I mean, will it come down a little bit, or it will normalize maybe in next 6, 7 months whenever the war ends?
So the demand, the cargo growth, is happening in this region only. That various data points, various statistics, and various research analysis, points clearly that the growth of the air cargo happens in this region. So we are well embedded in this region, and we cater to the demand generated in this region. So we don't foresee that it's going to drop down because of the war has given some sort of the temporary boost, from the already, growing, the graph. So it has just given a temporary boost. But I'm sure that, it will. Just to give you an analogy, sir, I mean, during the time of COVID, the air cargo volume, hit the roof, and the prices also hit the roof. But when I mean, after a year and a half or 2 years down the line, when things have got settled down, it does not mean that, the air cargo rates have gone back to the pre-COVID levels. It has still it stayed back at the, slightly higher than the pre-COVID level, but not to the extent of, what happened during the time of COVID. So, I mean,
just to elaborate what Kannan sir is saying, pre-COVID prices and post-COVID prices, the difference is much higher. It is not just the progressive increase in the price which should have happened year on a year, but it is much higher. The prices did settle, but didn't settle back to the old normal prices with its given escalation. It's gone much higher. The nice thing is that the only thing that goes up doesn't come down fully is the prices, and we like that.
Okay. Okay, sir. Thank you. Thank you for that. And again, please keep doing the great job. You're doing a great job. Thank you.
Thank you, sir.
Thank you, Prasim, sir. Yes, Mr. Yatish, please go ahead. Hello, Mr. Yatish.
Hello, am I audible?
Yes,
Yeah,
you're
well,
audible.
sir.
Please do.
Congratulations, sir, on the great set of numbers. I had a specific question around your association with Nauru government. How has that been progressing, and the joint venture which we had with them? And the MRO which was written out in the results of last quarter, how we are thinking about that setting up, and what are the plans with MRO as a different segment for us?
Yeah, with Nauru, the cooperation and the understanding is at a larger level, which is progressing well, sir. And we, unfortunately, because of the nature of its content and the UPSA in nature, we will not be in a position to divulge much details, now. But at an appropriate time, we will, the developments we will keep communicating to the investor community through the exchange. But I can broadly say that, it is progressing well in the intended direction. And of course, the MRO is a natural, requirement for the airline. And that also, is progressing well. And very soon that, starting from the next quarter and the activity, towards that, will pick up momentum and it will get communicated to the, investors community. And overall, and Nauru team is, very much, interested and very really serious and to have this cooperation blossoming at a larger level.
Got it, sir. Good to hear that. In MRO segment, just a follow-up, are we seeing that business to open up to third-party aircraft charters as well? Because India has a
Of
lot
course,
of
sir, that is
that.
the primary objective, sir. It's just not in-house maintenance.
Got it. Got it.
Okay. Thank you, Yadesh, sir. Mr. Hriday, please go ahead. Kindly unmute yourself.
Thank you for the opportunity. Congratulations, Kanan sir, Deepak sir, on a phenomenal
Thank
set
you,
of
sir.
numbers. I think our growth has been super normal, and I wish you more of the same going forward. So some clarity needed on the future of the 777. So we've raised 200 crores in our pref and now 200 crores in the QIP as well. So my understanding is we're looking to acquire 4 wide bodies and not 2. You mentioned only 2 on this call.
No, 4.
Four, sir.
Somebody was asking by end of this year, that's why we stuck, but actually it is 4. And
So-
for financial closure for the entire 4 has happened.
So when do you think we'll have a full fleet of the 5 plus 4, which is 9 aircraft?
Sometime, by the mid of next year, sir. That is the second half of next calendar year, we will have the entire fleet, operational.
So now on the projections, you mentioned that we should take an average of 3x of the 737s. In Q3, we were averaging about 25 crores a plane, and now we've averaged about 31, which is a spike up due to the war. So basis the guidance you've given, you're basically hinting at about 75 crores a month on the 777s. Is that correct?
Correct, yeah.
And could that be higher, or is this a conservative number?
This is a conservative estimate, sir.
This conservative, sir, we want to and we will do higher numbers.
Understood, sir. Understood. Yeah, because I think the capacity is 5 times that of a 737,
That's
right?
right. That's right.
Got it. So also, can you elaborate a bit on the routes that we're going to operate for these wide bodies?
That we don't want to divulge here, sir. I mean, that's a sensitive information, and we will communicate at an appropriate time.
Understood. So now on the costs and the revenues, you mentioned that the ATF is entirely a pass through. So just wanted to understand, this quarter we've seen our revenue yield grow from $2.56 to $2.72, which is a 16 cent increase. But our costs have increased 50 cents despite ATF being passed on. What is the reason there?
So as I mentioned, that the cost is after giving see from the balance, I mean from the P&L, whatever has been charged with regards to the forex, the losses, because they have done a restatement, the entire deposits and other stuffs, the lease rentals and everything has been restated, and the forex losses has been booked, and the basis which the final costing has been arrived at. And similarly, the maintenance reserve, which is earlier was not charged to the P&L. Here, the maintenance reserve is charged to the P&L. That is also impacting that, the cost.
Understood. Very clear. Very clear. So going by the estimates you're giving, I think next year looks like it's going to be even better. So wish you all the best and
Thank you, sir.
Thank you, sir. Thank you, sir.
Thank you, Mr. Hriday. So as we are running out of time, we'll have to conclude the call over here. So thank you everyone for joining the conference call of Afcom Holdings Limited. If you have any queries, you can reach out to us at research@kirinadvisors.com. Once again, thank you. Thank you everyone.
Thank you all.
Thank you all
Thank
so
you.
much.
Thank you, Kanan sir. Thank you. Have a great day.
Good night.